slightly sluggish in today's trade, but let's take that conversation ahead in terms of where the market could be headed. We have Mr. Rohit Srivastava, founder of Strike Money Analytics and India Charts, joining us on the show. Rohit, hi, good afternoon, and thanks so much for your time today. First up, give us a sense of where you're seeing this market action going ahead, because yesterday in the last few minutes of trade, we saw a sharp fall from the day's high, and that consolidation has continued for the market yet again today. What timeline are you seeing for this kind of consolidation? Do you believe this is just a temporary blip and that positive momentum we were seeing a few days ago could just be around the corner?
I think whatever you saw, the positive momentum that you're talking about is possibly the start of what could be a meaningful advance in the markets, because we sort of spent so much time above 24,400, 500, where the market has taken support in almost 5 times or 6 times over the last 4 to 5 months. But I think that basing phase is probably coming to an end. Most of the bad news that had to come out is already out. So I believe today's pullback is just one of giving back some of the gains that have happened over the last 4 to 6 days. 4 days for the Nifty, 6 days for the Bank Nifty, and I think it may not be more than a day or two, and the upward trend or upward journey should actually resume. There may, of course, be some amount of rotation between sectors that has become part and parcel of how this market works. The winners of today don't continue tomorrow, and then it again rotates back. So all of that will happen. But I think the overall trend should remain to the upside.
Right, Rohit, in a market like this, surprisingly, the sector that was under pressure for the longest time, Nifty IT, is the only gaining sector today and was the top sectoral gainer yesterday as well. Do you think this is only in the anticipation of the IT earnings that we are going to be seeing in the next couple of days, or do you believe that this momentum that IT is seeing is now sustainable and here to stay?
No, definitely the hope around earnings season is there, because they've been the most beaten down with all the negative news flow. So that means they're already very, very oversold, and earnings can be, not great, but it cannot be super. But at the same time, they cannot be as bad as where prices are. So, it's a mix of you've priced in the worst case scenario, and things probably are not that bad. So to that sense, there could be upside, but you must segregate your view on IT in terms of short term to long term, because what happens is market is recovering, and from a worst case scenario you can get a recovery in IT stocks for a few days, few weeks, but can it be a long term sustainable outperformance? I was looking at a ratio chart of the Nifty IT to Nifty since the year 1995, and what you find is ever since 2000, since the tech bubble, the ratio has actually gone higher only post COVID for a brief period of time, and we are still lower as of today than that high, which means that on a 20-year basis, you really underperform the Nifty if you held on to IT stocks. So they might be a favorite during some defensive periods when there's no growth in the market, so people end up buying IT. But longer term, at least large cap IT has not given meaningful returns relative to the index itself. So it's not a good long term investment bet, is what I'm trying to say. But yeah, short term, we do have a setup where you can get some upside.
Okay, so IT is not a good long-term investment bet. That's the word coming in, and all eyes will be on TCS, which will be reporting its numbers post-market hours tomorrow. Mr. Srivastava, thank you so much for taking your time out and joining us here today on ET Now. Thanks.